In a LinkedIn post, Trinh Nguyen, senior economist of emerging Asia at Natixis, wrote a few days back, and I quote, "India presents a positive mirror image of China's debt, demographic and deflation woes. Corporates have deleveraged with a debt ratio of 54% of GDP, which was 78% in 2012 versus China's 165. With its inclusion in the JPM bond index, bond flows will rise. Indian households will also open their wallets and invest in the rise of the investment cycle in the country as they rotate out of deposits and gold into pensions and mutual funds. We are structurally bullish on India, which we think is only at the cusp of its investment bull run that will be beyond 2024 and whoever wins the general elections. Brackets, Modi is a shoo-in." Now, this post and her interaction that she did with the foreign media house went viral in India, and we thought it's best to try and understand from her about how does she see this aspect, which she's put it succinctly in 5 lines, and expand that over a 20-minute show with us on NDTV Profit. So let's get her in on the show. She's the senior economist of emerging Asia at Natixis. Trinh, so good having you. Thanks so much for taking the time out. And at the outset, wishing you a happy new year. And you made a bunch of Indians very happy with your opinion.
Well, that's a lot of Indians because that's 1.4 billion and there's going to be 1.6 billion by 2040, right?
Yeah.
So I'm very happy that a lot of people are happy.
No, but let's try and talk about this. When you look at, I mean, because I'm sure you've looked at emerging Asia for a while now. Why the timing of this post is interesting because about the demographic dividend, about the uptick in demographics, about let's say China +1 or Europe +1, all of these talks are there for a while. Has something changed in the last 12 months that has led you to put out this post in the month of December 2023?
First, I want to clarify that I've always been constructive on India, even in the midst of the Adani scandal in January when everyone was down on India and itself, lamenting it. Particularly when China was on a really high, right? It was gaining double digits in stocks while every day there was negative news in India. I've always been constructive. And we have been constructive for a long time because the structural picture is very bright. So what I mean by this is we do know very easily the demand side of the equation, right? The demand side is you have a lot of people, and that's only going to grow. Working age population. Not only that, they're underutilized, right? So in terms of the size of the working age population, it's roughly 900 something million, but only less than half is utilized. So there's a lot of room for growth. A good example I would show is that China's global market share of labor-intensive manufacturing is 30-something%, was India's 2.5%. So we can just use the people component to then increase much as a benchmark. Now, the supply side of that is what we get really excited about. And I think that's really what the excitement is and why India is center stage, and why we think that the structural situation is right. One is that India is actually, from a policy perspective, has emphasized on what's really needed, right? You have people, but it's not really useful if they can't move from place to place. If the roads, the expressways are lost. If you don't have enough electricity, right? The growth of per capita energy growth in India has been phenomenal, higher than Indonesia, for example. But even with that, it's still amongst the lowest. So that means there's a lot of room for India to grow. But the point here is that India is investing in the right place, in infrastructure, empowering people, empowering them to do what they need via renewable energy, via building expressways, and so on and so forth. And now the second aspect of that is that the capital market is also improving, right? You have, for the longest time, lack of investment prowess. And so we have the public side of the investment rising, but the private side really is lacking behind. An example I'll give to that is that in India, it's very difficult to fire people. If you have a company before, for 100 people, you have to have the government intervening. Now that has increased to 300. And I think over time, this labor market inflexibility is going to have to change, and it's changing in the right direction. Now, finally, why we're positive is that India has been essentially cleaning house while everyone has levered, right? Corporate balance sheet is one example. If you look at Nifty public listed firms, the leverage ratios have actually declined. Now, that is a very good environment for you to be able to have a cleaner balance sheet to build up. And what we want is to be able to do that. Corporate balance sheets are very trim. As I mentioned, as a share of GDP, corporate debt in India is very low. It's only about 54, 55%, juxtaposition to China's 165%. Now, but it's not the only country it shines against. Many other countries, whether or not it's Korea and so on and so forth. Even in Southeast Asia, we have Thailand with a lot of household debt. So I think India looks quite bright from that perspective. And finally, the investment perspective is not just coming from foreign investors positioning itself to take advantage of this growth dynamic, but it's coming indigenously within India itself, right? India is investing via public investment. Indians are investing by deploying more capital to Indian companies. And I think this is just the start because the share of that is still very, very small. So the incremental increase will make a huge difference for India. And we're, in my opinion, only at the beginning of the investment bull cycle that is necessary. And why do I say that? I say that because if you look at energy consumption per capita in India, which has grown drastically, as I mentioned, higher than Indonesia. Now, that massive growth is still making it only half of per capita consumption of Vietnam. So for India to grow to Vietnam's per capita of energy consumption, then you will basically double the total energy consumption today, meaning that there is a lot of room for India to grow.
Well, I like that comment a lot, Trinh. I must tell you that. So I've captured four pieces or four legs, if you will, out of your opening answer, and which kind of summarizes some of the stuff that you wrote on the post as well. I'm going to pick on them one by one. I heard you say that policy making in India is correct because India is investing in the right places. Would you elaborate a bit on that? And are there global comparisons of countries which would have been at some point of time at the stage that India is, did the same thing, and then the outcomes resulted in what you might be seeing favorably into some of those countries?
I would say India has built a lot of roads, but what it has focused on recently, right? Because we know about infrastructure in India, and that's led to generally a banking crisis in a few years back. But currently, it's different in that the quality of infrastructure matters, right? So we want to build expressways that connect and to reduce road bottlenecks to allow trade and industry to flourish. So I think that's the key difference here, is that not just about building the quality of infrastructure, building a lot of roads that don't go anywhere, but the quality of roads are not so good is not what we want. And I think that's the key here. India is building a higher quality infrastructure, and it's learned from the past. So in the past, infrastructure financing is primarily via banks, and now it's trying to broaden that financing beyond just banks to other actors. And so you can see a lot of work is being done to basically create a more diversified investor base so that risks are not concentrated. And also in terms of the focus on investment is also so much better. Now, why do I think that it's in the right place? It is in the right place because India has the demand on infrastructure, demand on supply, unprecedented anywhere else, right? We have a lot of people and then more people are coming. So the trends, whether or not we're looking at urbanization is going to put a lot of pressure. Population growth is going to put a lot of pressure. Industrialization puts a lot of pressure. If you want to industrialize, as you know, India wants to grow on the manufacturing side because that's an important equation to it absorbing all this excess labor, of creating jobs and creating wealth, right? And in order to do that, you need infrastructure, not just roads and expressways, but you need the power sector. And I think the power sector is where the current government is quite put a strong emphasis on. What we learned from the energy crisis is that India did relatively well, right? Juxtaposition to Pakistan that put all the eggs into the LNG basket. India energy source is quite diverse. They increased a lot of investment into renewables in addition to the traditional ones. And so that diversified So increasing the source of energy and broadening the source of energy is quite important for a country in India, because we absolutely need it, not just for the in use, but also for the goal of India in the future, which is this industrialization. And manufacturing requires not just the input of labor, but also the inputs such as infrastructure, including energy, right? When you don't have that, your entire economy is frozen. And that's essentially what happened in countries that had an energy crisis during the energy crisis that occurred in 2022. So this is one of the reasons where we think that it is in the right place. The second is, if you look at the government balance sheets, right? One of the things that they have managed to do, which I think is quite impressive, is that they reduced the corporate tax rate. Manufacturing taxes went down, but because of the increase of GST and etc., the tax revenue ratio has increased. We still need India tax revenues to increase further, but the fact that it's streamlined is still quite important for India to move forward, to have more fiscal space.
Trinh, the question that might come to mind is countries can grow infrastructure and all forms of infrastructure by either leveraging themselves in the balance sheet up to the neck, or do it smartly. Now, my question to you is, when you look at a country of the size of India and the balance sheet that India has currently, do you think the ability to grow smartly while meeting the needs of infrastructure that the population and the growth demands, do you reckon that's possible?
Absolutely. You have to target the sectors you want. You have to target the areas you want. And I think there's so many areas for India to grow, right? There are different solutions to different locations. So if you're in a remote area, you require more solar because your distribution, the grid may not be there yet. So you can't just grow the grid, across the country, given how large it is, the capacity that's required. So I think growing it smartly is necessary, and infrastructure needs are there, but identifying them in a way that's necessary is also quite important. And I think the solutions are there, and investors are very keen, right? If you look at India as a country has risen to many people are overweight India, not just in terms of India just recently being included on the bond index, which is a way for investors to passively invest in the Indian government, which then essentially invests in India through its infrastructure projects. But also, I think they increasingly want to invest in Indian companies that want to take advantage of the huge demand that's there, and the policy push, the incentives that's given out to prioritize the sectors. And I think that if you look compared to Vietnam, India and Vietnam, that's one thing I think Vietnam has gotten right. And even that Vietnam has gotten right, it's still a challenge for Vietnam, right? Vietnam puts a lot of emphasis on the energy sector, right? They know that to industrialize, that's the number one thing you need, beyond ports and transports and everything else you have to do as well. But to run a factory, given the climate where it is, the volatility, you really need that. The industrial process is quite important. So I think prioritizing a fundamental sector in your economy, and one that whose demand, even if it's very strong at the moment, can only rise much more massively. As I mentioned, even as India has invested quite a lot into infrastructure, particularly in the power sector, it is still nowhere as needed because the per capita consumption is still the lowest in the region. Only the Philippines is lower, and the Philippines is known to be a super laggard on this sector. So I think there's a lot of room for it to grow in the future.
Got it. Okay. One factor that a few people mentioned, Trinh, back home is the current account equation changing for India meaningfully, and that giving it the elbow room to put in money to work without having to bother about what would happen to the currency, because otherwise India is very vulnerable to crude price shocks, and that equation is changing as well. Is that something that comes to your mind as well when you think about the overall equation?
Right. So India has a food surplus and it has a fuel deficit. As we all know, that the current account It is the third largest importer of oil. That's going to continue to be the case, and is even more important as China slow, and India demand is only going to rise in the future. So even if it expands renewables and etc., demand for energy will continue to increase. Now, I think that the positive side to this downturn of the China cycle, the downturn of China growth cycle, which is not just cyclical but structural, is that India does not have to compete with China, right? As it's trying to industrialize, as it's trying to build up, as it's trying to invest, it's going to be able to buy commodity prices at a much lower price than, say, when China is also building at the same time. So I think as a result, you see the current account being supported a bit. 2023 was a terrible year for exports for everyone, including India. But even that, because the oil import price was much better, it's quite support the current account. So I think moving forward, we think that oil prices are still going to range around to where it is, but it's very unlikely to rise to above 100, right? When oil doesn't rise above 100 and commodity prices recalibrate to a lower level, it's going to be helpful for India. That's going to need to import a lot of this to build infrastructure.
Got it. The other aspect of this is, and I know we're not talking just about 2024, but India's rise or potential rise of export revenues. Now we know service exports have been terrific and they've gone up. Now we are getting to merchandise exports because of the PLI schemes and focus on manufacturing, etc. Do you reckon over a 5-year period this aspect of India improves even as the economy grows? Can the percentage contribution of exports, both service and manufactured goods, improve? Is that something that gets factored in your estimates as well, or not quite?
To improve, and I think the fact that it's focusing on the infrastructure necessary for it to improve is important, right? So the will is there, with the manufacturing tax cut, the PLI incentive, and so on and so forth. But for India, I think the base is also quite low, right? If you look at the total exports for India is way exceed Vietnam, but you look at only merchandise and it's actually lower than Vietnam, which is a very small country. It punches above itself in terms of goods, but that means that for India, the room to grow is very high. The room to grow is very high, and so as a result of that, we think there should be continued growth. If you look at FDI into India this year, there was a decline of FDI, but most of the decline is driven by services, particularly in tech, because it's quite interest rate sensitive, right? Higher interest rates really doesn't help with investment in sectors that are being hammered by it. So as a result, if you look at, there's still growth of FDI beneath the weak number, but the growth is into manufacturing. But manufacturing will need to grow into a larger share. And I think this is one of the importance of the government has made quite a few positive policies, and that they're slowly reducing a lot of this import tariffs for intermediates and so on and so forth, creating incentives for the sectors that they want to prioritize, and that they will need to continue to do. Because that's really the lesson of this, is that the will is there. Everybody wants to invest in India, but it's easier to invest in India in portfolio flows, i.e. buying bonds or buying stocks, than going there and building a factory, because then you have to deal with the different laws and how to do so on and so on and so forth. And I think the hurdles for that are being taken away, either through improving the soft infrastructure, by that I mean labor market laws, or the hard infrastructure in terms of increasing the capacity of infrastructure and so on and so forth. That will take time. And I think the growth will be gradual and can be accelerated should they be continued with the new administration. And then I think progress tends to be quite gradual until they reach a tipping point where you have enough supply links. You have big investments that will eventually lead to smaller suppliers following suit, and that's essentially what happens in Vietnam. Growth doesn't go in a linear pattern. They can be in an exponential way, and I think that's the way for India, assuming there's growth, and we think that there's substantial opportunities for growth. And I think this is one area that will make a huge difference in India, not just for the export sector, but also to generate jobs, to create steady capital inflow. And it's the job aspect. I think that will be a huge game changer to create a bigger middle class.
Okay, so I'm presuming that over a 5-year, 10-year period, you're factoring in more FDI into manufacturing and a growth, whether linear or non-linear, but growth into that aspect of India over the course of the decade. I'm presuming that that is what you mean as well, and that's interesting. Now, Trinh, and please correct me if I'm wrong, I presume that's what you mean, right?
Absolutely.
Got it.
I think, as long as we continue to make the same progress as we do today, and we do know that you don't always step forward, right? Sometimes you step backward. But if we continue with the progress we make today, I definitely think that the room for growth is quite massive for India.
Okay. One interesting note, one interesting line in your post, Trinh, was that Indian households will open their wallets and invest on the rise of the investment cycle, rotate out of deposits and gold into pensions and mutual funds. We've seen that happening in pensions and mutual funds per se since maybe 2017-18. You reckon this will accelerate and not just fund capital flows, but also fund infrastructure building into the country?
Absolutely. When we talk about investors, they are not just talking about foreign investors, right? And foreign investors have actually, with the exception of 2023, have been selling India, right? And actually, it's domestic India that's buying India, and I think that's an important equation, because what we need is for, which is always a much more important variable than foreign in terms of portfolio flows, is that if you have people moving out of gold into having trust in the system to buy financial assets to support these companies, to allow them to have space to deploy capex, particularly the private sector firm, particularly firms that are not in the sector supported by the government, then you can have the broadening out of growth, right? And that is really what's important. You want employment growth to then generate wealth in the country. And I think that will be an important trend for India, because historically Indians have trusted gold and etc., real assets more, which is not very different in other countries. But I think that once we have more participation, then you can have that becoming a very big investor base. Already, Indian households are an important investors of government bonds, right?
Yeah.
Foreign investors, we talk a lot about JP Morgan bond index making a difference, creating some 20 whatever billion flows. But really, the Indian households, India funds itself. People tend to talk about India as part of the fragile five, but there's nothing fragile about India, right? India, in contrast to, say, a country like Indonesia, or in the extreme, of course, Turkey, but we don't include that. Let's just talk about Asia.
Yes.
Is that foreign ownership of Indian government bonds is very, very low, about 2%, right? And it doesn't, every year the government has a 6% target that doesn't get reached, right? Which means that India funds itself, right? So I think Indians are not only going to fund the government bonds, but I think they're increasingly going to fund private sector companies. And I think that is going to be a huge game changer for India when they invest in their own economy rather than flowing it to other assets and creating this is necessary financing.
Got it. Trinh, my final question to you, and that is, what is it that you're watching out for in 2024, 25, 26?
Well, I would like for India to continue to do what it does, which is to understand that it needs to continue to invest in the key sectors of the economy. They will also need to start looking out to the rest of the world, right? So as big as India is, and it's a huge driver of the world growth, it actually is being competed with a lot of countries that are smaller. So for a country that's as big as India, what I mean is population, it needs to grow in all sectors. So if I see any backward moves, I would be a bit concerned. So I'm looking forward to more positive reforms, the broadening of reforms to all sectors in India, so that it will be more competitive, because we all know that Indians are competitive globally. Whether or not India is competitive in different sectors, it remains to be seen, and depends on the policy of the government to unleash that potential in India. So I'll be interested to look out for, and obviously the elections results and so on and so forth. But we all know that all of this is really contingent on what they will do regarding the budget, what they do in terms of policies, and the necessary reforms to really unleash the animal spirit, which I think is already unleashed, but to continue with it.
Got it. Trinh, lovely talking to you. Thank you so much for taking the time out and being with us. And to you and your team and family, wishing you a very happy 2024.
Happy New Year.
Thank you so much. And viewers, thanks for tuning into this episode of Profit Conversations.